Global markets have plummeted because of fears of conflict in Ukraine. £53 billion wiped off the value of the UK's blue chip share index.
But more worryingly for you at home, it could also exacerbate the cost of living crisis with the prices of fuel and food increasing.
Well, joining us now in the studio, this man is Andrew Sachs. Good to see you, Andrew. Andrew's head of research and analysis at ETX Capital. So you're watching these markets. And Isabel said this will affect people watching at home. So this is nothing that is just hypothetical. Tell us how it will affect all of us.
That's for sure, unfortunately. And it's some of it is a pattern that's happened before. If you can look at some of the historic data that's happened whenever there is some geopolitical conflict, it has some similarities. For example, there are a lot of analysts that used to say, buy at the first bullet. So if you're a trader or someone who is interested in investing in the markets, usually there's been a lot of investment in when something geopolitical happens, because it's quite common that the markets across the board, commodities markets and the global currency markets, commodity markets, all of the instruments basically generally tend to go down in value in those areas. So it's quite normal at the moment what we're seeing. At the moment, there's no conflict yet.
Yeah.
It's all about the news. It's all about what we're seeing in the news. And it's all speculatory. And even Bitcoin, even cryptocurrency have actually gone down, that's the unusual factor. Everything else, you'd expect the major indexes like the FTSE 100 and those in major financial centres like New York and London to take a hit.
Yes.
But cryptocurrency, which you would perhaps expect that people who are living in Ukraine or Russia, where there is no local confidence in the currency markets in Russia or Ukraine by local residents, you would think they might use cryptocurrency as a store of value. But that collapsed by 50% since November.
But Andrew, if it's hurting us, is it hurting the whole world? Is it hurting Russia as well?
Well, not yet, because Russia and Ukraine have been in a situation for the last 7 or 8 years where there's been very little confidence in the actual local currency market and the local economy. Nobody there really trusts, even though they're not really allowed to say, trusts the local markets. So anyone with any capital or any value will try to get it out of Russia or Ukraine, and that's been the case for quite some time. But it's more likely, ironically, to affect right now, before any potential conflict starts. It's more likely to affect the economies in Europe and Britain, because Russia supplies 95% of the natural gas to Europe, not to England, but to Europe it does. So it might be that there might be some. If Europe gets involved in takes a side in this conflict, it might be that Russia might retaliate by restricting their gas supply, and therefore it would cost a lot of money to heat your home. In Britain, that won't really happen, but there might be an oil. It could be that oil values would rise. If you think about it, a year and a half ago, oil was in negative equity, and all the governments in the West were talking about a green agenda and all of that, and ramping up that kind of fear. Now here we are, oil's $87 a barrel, and they're talking it might go to 100. Yeah. So Vladimir Putin knows that, and he knows that if anyone tries to put sanctions there, they might say, okay, well, we're going to restrict the oil supply, and therefore oil will go up in value, and then maybe the OPEC countries in the Middle East will see an opportunity, and it's all about supply and demand, and they will increase the prices there too.
What about what Bill Browder is suggesting? You'll know, obviously, he's hugely successful financier, worked a lot in Russia, made his fortune there. He's now become an international humanitarian off the back of the humanitarian breaches that happened in Russia to his own staff. He said, we've got to stop tiptoeing around Putin. He said, we've got to hurt Putin where it hurts, and that's with money. And what we should be doing is freezing the assets of the oligarchs, 5 at a time, every week on week. But the reason we're not doing that is because we're so intricately linked with them here, and the London economy is so much pumped up by Russian money.
I think it used to be. I don't think it is so much anymore. If you think about it, in the 2005, 2006, there was a lot of people who had 15 years earlier obtained state property for almost free, and suddenly become CEO of the company that they were manager of under the Soviet system, and therefore become very wealthy very quickly. And they had to get their money out, because if you're an ordinary working person in Russia, if you don't spend your salary today, it's worth nothing tomorrow. So there's no point saving money in Russia. So anyone who's been a senior position knows that. So they will take these supposed oligarchs of the 2000s took their money out to stable economies like Britain or Canada. And they employed lots of people, they built big companies here and so forth. Hitting them is the wrong thing to do, it's the wrong answer, because it won't do anything. Vladimir Putin, even though some of them have got close connections to him, is not interested in saving other people. He will drop
his own wealth is hidden. He's hidden all his wealth in these oligarchs, and that's how the only way that you can speak to him is in monetary terms.
Yes, although that's a very small proportion compared to, for example, he owns Gazprom. He owns all the raw materials.
Putin does.
Yes.
And funny, Joe Biden is now talking about hitting him personally in his own wallet, personally.
Well, that's the thing. The only way is impossible. It's absolutely impossible. And Vladimir Putin is a very, very, very well experienced, very clever, very organized man who makes no mistakes. So Russia is a raw materials economy. It's all about, it doesn't have a diversified industry base like Britain or America. It's a raw materials economy. It's a very rich country in raw materials. So you have oil, gas, minerals and so forth. And the majority of people who have very good jobs work in those industries. So those are owned by not just the government, but by one person. So he's interested in maintaining his own wealth. And the only way to maintain his own wealth is to keep control of these raw materials base. So if you hit the raw materials base, it will destroy the industry of every single developed country in the West because of their inability to buy the products.
If you're watching at home today and you've got a pension and you're worrying about it going up and down, can you Putin-proof your pension?
Very difficult to do that. I think it's a question of, most pensions are, that's a very good point actually, Eamonn, because most pension funds are traded on the markets.
Yeah.
So they rely on a diversified range of products, such as commodities and funds. So they're diversified funds. So of course, if we start getting volatility in those funds, then the pension companies will start to find that the pension funds that are for the future, your people saving, who are working now, not people who are having their pensions paid out, that's how it is. But if it's a future pension fund, then there will be volatility, and it could be that it might not be enough for retirement, or it might go up. You know, so it's very difficult to actually, unless they're tracking indexes, and it's very difficult to have a fixed rate on them because of the way they operate. So that's hard. But I think the biggest elephant in the room right now that everybody faces, and I know that there's a lot of people who are very concerned about this, is that gas and oil, if you've got a house that runs on gas central heating, some people are, it's a rumour at the moment, but I have heard from some people in the know that gas prices domestic gas prices might go up 500%, which is unbelievable. And now you have very little competition because 25 energy companies.
I know people in Northern Ireland who are facing a 900% increase, and they know it, and they're sitting in their homes with coats and jumpers and whatever they're doing, all that, which incidentally I've started to do. I find it...
Sorry.
I'm true.
Was this because you got the gas fire on again?
No. I now I've got this coat that has like tin foil on the inside of it. Not that I put it there, but it keeps the heat in, and I find it very, very comfortable. So I now sit with my coat on.
You are a changed man.
Watching TV.
Never
That
known
actually
to be
sounds
cold.
quite nice, to be fair.
Yes, it's quite cosy.
I went to Northern Ireland on the ferry once.
Yeah.
If you step outside, then it's cold. But when you get to once you get to the mainland, it's actually okay. It's not much different to here. But in terms of cost, I think that's the main that's the main thing. And then, of course, if the Western economies find that they have to deal with this inflation issue, and there isn't enough, and then the commodities and the investments that they have as stores of value go down, we might find an interest rate rise might suffice, and that would be really problematic.
Would you describe these as scary times?
Yes, for a lot of people I would. I think it resembles a bit like the 1991 interest rate. The interest rate did go up in 1991. Yeah. It almost
reminds people that. What they went up to.
They went up to 15%.
Can you imagine that on your mortgage?
Imagine? So if your mortgage is £200, for example, and you earn £500 a month or something like that, and suddenly they want £1,500 for your mortgage and your salary is £500 a month. Yeah. People, whole construction companies who were financing. You know how the construction companies work. They borrow the money, build the houses, and then they sell the houses and pay the financing back. So they borrowed the money on interest rate terms. whole construction companies walked away from half-empty building sites because they knew they couldn't sell the houses. Nobody could get the mortgages, and they won't be able to pay their debt, so they cut and left.
Yeah.
And that was only 30 years ago.
Yeah, and there were so many suicides in the industry. Yeah, it's awful. Gosh, interesting to talk to you, Andrew Sachs from ETX Capital. Thank you very much.
You're a very interesting man. I do have.
Thank you very much.
Not at all, not at all.
Nice to be here.
That's good. And please come back. Please come back and see us again. You were listening there to Andrew Sachs. He's Head of Research and Analysis at ETX Capital.